Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India.
Welcome back to the India Fintech Diaries, your go to show for all things India Fintech. I'm Hemant, your host. And in today's episode, we will continue our journey into interesting new developments in the world of lending. P2P lending in India is expected to grow at a CAGR of 18 to 20% to a $10 billion market by 2026. But what exactly is P2P lending? Joining us today to demystify P2P lending is Neha Juneja, CEO and co founder of India P2P. Welcome to India Fintech Diaries, Neha.
Thank you so much for having me here today, Hemant.
Thanks, Neha, for joining. And Neha, to kickstart this discussion, let's start with a brief overview of your background and your journey to founding P2P. I understand that you are a serial entrepreneur. So please give us a view into the entire journey as well.
So, Hemant, I'm a serial entrepreneur and I'm also a bit of an old entrepreneur. So, I started back in 2008 with a fintech venture. This is kind of right out of business school. At that time, we were very simply the first website that gave out live derivatives prices to retail investors or anybody who wanted to see. And this is before the financial crisis. So at that time, about two-thirds of the trades in the futures and a little bit of the trades in the option segment would come from retail investors who had to call up their brokers for a quote or a price. And we were simply a service that gave out prices live, to them, and just did that much. That business had a reasonably quick exit to one of the larger exchanges in India, commodity exchange in India. And then the financial crisis happened, so we felt a little lucky. And then we also did a bit of analysis to see that what was the result of our business for different stakeholders, and realized that 90% of people lost money who kind of used our service, even though, which is what happens in the derivatives
Exactly. Yeah.
segment, any which way. So then the same founding team kind of, so humne, like we had this resolve that now we will do a win-win business because this was like a rather short journey. And we kind of narrowed down on the problem of clean cooking. So we kind of tried to understand that, what is like an India-wide problem we can solve. And surprisingly or unsurprisingly, we narrowed down on the problem of cooking on matti ka chulas, because it is a very big problem. It's roughly about a third of the world, or more than a third of the world still cooks on traditional indoor open fires, as we call them, or matti ka chulas, or, putting some stones together as a structured bonfire or thereabouts, which is super, super dangerous. This is not a fintech topic, but it's super dangerous. It's bad for the climate, all of that. And we started making cleaner burning stoves that use the same fuel but burn less than a third of it and have a lot less smoke, less climate impact, less health impact, and all that. And ran that company for 12 years, raised venture capital, gave an exit, all of, the full cycle completed. But in that, it is in that Clean Cook Stoves company, Greenway, that one we exclusively worked with rural women and exclusively worked with microfinance as a distribution channel, because microfinance, as you know, the Grameen Bank Bangladesh model, which is also what is implemented in India, is women organized as groups and essentially with a indexing towards rural women and rural households. And came to this conviction that this is a great borrower segment. It's a great asset class which is very disciplined about repayments. It is very prudent and savvy about money, and it really wants to grow. It really wants to increase incomes and, improve quality of life for their families, communities, thereabouts. And in essence, I thought so many times that why cannot I lend directly to, rural women borrowers, make a reasonable return also. And this would be a very purposeful investment to make. And there was no means to do that, at least back then. But when these peer-to-peer lending guidelines or regulations were introduced by the RBI in 2018 or thereabouts, is when the whole idea of India P2P kind of got formalized. And that is just taking that thesis that microfinance or small businesses owned by women are the best borrowing segment. It kind of got
Mm.
transposed to the idea of peer-to-peer lending, and this is where we are now.
Very interesting journey. You have transfers from derivatives to clean cooking to back to fintech. So very different and interesting journey. Now, Neha, when we talk about peer-to-peer lending or P2P lending, can you help our audience understand what exactly P2P lending is and how does it work?
So, Hemant, very simply, peer-to-peer lending is one individual lending to another individual, or one party
Mhm.
lending to another party. This is the kind of udhari or lending we would have done. Very simply, we would have done with friends, or even in some kind of a formal way. Otherwise,
Right.
but the fun, which is easily understood. You give somebody a loan directly, and they pay you interest. The fundamental benefit of P2P lending is that normally in any economy, and especially in India, there are a lot of financial intermediaries. You give your money to a bank lends it further, or sometimes
Right.
you buy the fixed deposit of an NBFC, which lends your capital further. All of that.
Hmm.
Peer-to-peer lending is essentially replacing these intermediaries with a technology stack so that the spread that the intermediary was earning is kind of split between borrowers and lenders, giving benefits to both sides. Right now, across the industry, this benefit is going more towards lenders than borrowers, since the industry is in a kind of new, still upcoming phase.
Got it. Got it. Got it. Got it. And Neha, you also spoke about in your India P2P Genesis story that once the regulations by RBI in 2017 for NBFC P2P license came in, that's when this entire idea got firmed up. Can you help us understand or identify the clear regulations or key regulations in that concerning P2P lending?
So yes, Hemant. So peer-to-peer lending in India is regulated by the Reserve Bank of India. There were
Hmm.
P2P lending platforms even before the regulations came in, and I
Okay.
think it's just my sense. I of course cannot speak on behalf of the regulator, but my sense is that the RBI saw how peer-to-peer lending, because of technology, was catching up globally, and there were some
Hmm.
issues in markets like China and a few other places as well. Is why they came in with these regulations. The regulations fundamentally permit a technology platform like ours, and many others also, to solicit capital from investors on one side, and invest it in debt investments, which are again individual loans on the other side, and also do
Understood.
a bunch of de-risking practices in between, which vary from platform to platform. But by and large, one of the big common de-risking practices is that none of the platform is allowed to touch your capital. So
Hmm.
all the capital flows through escrow-based mechanisms, with the escrows monitored by a trustee, which is endorsed by the regulator, and
Okay.
other regulations as well, which limit your exposure to any one borrower or thereabouts. So some, and of course, every platform does its own de-risking over and above what compliance requires. But fundamentally, it's just enabling technology platforms to move capital from investors to borrowers and back.
Understood. And for last line that you talked about, where de-risking related to concentration of borrowing by a single borrower. So that basically means if I am a lender, it ensures that all of my money which I'm investing over a period of time is not concentrated with like very few borrowers. So it maybe has put some limits on it. Is my understanding of that correct?
And that is absolutely right, Hemant. That is what the regulator also expects. And then
Hmm.
platforms, almost, I would say almost all platforms go further and offer you kind of diversified portfolios. Of course, you can pick and choose whichever loan you like, but diversified portfolios to ensure that, with tech diversification, granular diversification, or suggesting a granularly diversified portfolio is very easy. It's very easy to break capital into small bits and reconstitute it once a tech stack is in place. And
Hmm.
that's what most platforms do, where we'll just ensure that, let's say you invest as little as 10,000 rupees or even 5,000 rupees, that your 5,000 rupees should be split across, let's say, 8, 10 loans. with no
Right.
concentration of these loans across any geography, any type of
Hmm.
business, and multiple such other parameters.
Got it. Got it. That's very clear. So, and Neha, now coming to India P2P, even in traditional NBFC, finally the business is same, which is giving loans for something, right? And India P2P, if you look at P2P market and you explained it very, very clearly, it's still someone lending to someone. Now, specific to India P2P as a business, what is the customer segment that you're targeting? What is your differentiation as a business?
So, Hemant, our differentiation is in our borrower segment. So, we
Hmm.
target women and small business owners, and of course, a bulk of our borrowers are women small business owners. And
Right.
there are more than a few reasons for it. I believe, of course, this is my claim that it's India's best asset class. Small
Hmm.
loans typically generate higher interest rates because
Right.
capital kind of takes a long journey to get to them, and of course, there's economies of scale everywhere. So small loans can benefit lenders from typically higher yields, and it is women borrowers which otherwise fall into the whole microfinance industry that actually have the lowest defaults. They are the least likely to default. If you look
Hmm.
at all types of lenders in the Indian economy, the type of lender that has had the most commercial success and the best returns, kind of interlinked, are microfinance lenders who lend exclusively to women, semi urban, and rural women. These are
Understood.
the types of lenders that have gone on to do the most number of IPOs. 10 of them have become banks, which is saying something, and
Yep.
just generally very robust, vibrant enterprises. And that's the segment we are playing in. Before India P2P, there was no way for retail investors to invest directly in the women business owner asset class, which falls under microfinance.
Got it. And now you explained about what is your borrower class. But as far as lenders is concerned, is there a typical profile on your platform that you see?
So we do see. I mean, we collect less data about our investors and a lot more data about our borrowers. So it's
Right.
kind of easier to qualify the flavor of the borrowers than the lenders.
Uh-huh.
But I will say two things. One is that
Hmm.
most of our lenders are relatively savvy investors, which means
Okay.
that P2P lending or the India P2P investment is a part of an overall larger portfolio, which is how it should be. So
Right.
that's so relatively savvy investors. Some of them come from a lot of them come from lending backgrounds because they very
Hmm.
quickly understand microfinance and kind of have high conviction because of that. The other is that while like 95% of our borrowers are women, I think less than 10% of our lenders are women because that is also the reality of India,
Yeah.
which
Yeah.
also we'll work to change, but will of course one thing at a time.
You're right. It's a slow process. More effort needs to be put in that direction as well. So when Neha, you spoke about the borrower, you said that the primary category that you're lending to is women and self-employed, and a combination of that from semi-urban and the rural areas. Because that's the segment you're serving. Are you exclusively digital, or you also have a partner model where you are partnering with organizations to reach to this category of customers?
So we are digital. So we disburse, we onboard, disburse, and collect from the borrowers digitally. All of that
Hmm.
is done, and lend at an intersection of a business and a woman. That's our sweet spot. So
Right.
our borrowers are essentially like have been running their businesses for 5, 6, 7 years. Just to give you
Hmm.
a little bit more flavor of the borrowers, why it's possible to be digital in this segment. We do have agents, like partner agents, who do a physical verification of the business and physically meet each borrower before lending to
Right.
them. But why it's possible to be digital is that the microfinance movement is reasonably old. It's been 10, the sector was regulated some 11, 12 years ago, and
Hmm.
very solid regulations. It has grown well because of those. Grown well as in grown in size and also in discipline over the years.
Right.
Now, microfinance women borrowers, all of them have a CIBIL score, which is something that
Hmm.
most people think that rural women don't have a CIBIL score, and they have a good CIBIL score. So they are relatively easy to lend to, which also means that they have borrowed before, they have repaid in a timely way before, and which is why they have a little more comfort than, let's say, the general rural population when it comes to financial services and digital financial services as well. a lot of people are surprised when I share this data point that India would have about 500, 550 million individuals with some kind of a civil footprint, of
Right.
which about 240, 250 million would be active borrowers. Of that, 80 million, or about a third, are women borrowers.
Hmm.
So it's a lot larger than what we imagine it to be, and it's a lot savvier and kind of digitally approachable also than what we imagine it to be.
That's a very interesting insight. So, Neha, we spoke about the sourcing of the customer segment. We spoke about the underwriting, that most of them have a CIBIL score, so you can use that data to underwrite your customers. Now, coming to collections, is collections also completely digital for you, or you use your partner agents that you spoke about to visit them to do the cash collection?
So in this segment, part of the collections are digital and part are cash.
Okay.
We play in the digital, on the kind of digital side.
Hmm.
And I would say that your traditional collection modes like eNACH, etc., are not super viable in this segment, although
Right.
about a good percentage of our collections come through eNACH. But we
Hmm.
understand which borrowers can do, like we can auto debit their bank account and where we can't. But for a large
Right.
bulk of the borrowers, what is truly a game changer is UPI. So the collections come via UPI. And because these are such savvy borrowers, most of the collections come, more than a few days in advance. So if you
Wow.
start sending a borrower, yeah. So like, sometimes we share our collection efficiency data with external, third parties or thereabouts, and they're surprised to see
Right.
that how is your collection efficiency more than 100%. And then we say that it's because you start sharing the payment reminder 6 days in advance. You have to
Right.
share it some days in advance, and same
Hmm.
day you'll get most repayments.
Interesting. Yeah. So the intent is always there. It's just about a reminder coming in and they make the payment, most of them.
The
That's
intent is there. Also, in this segment, most of the women are organized as self-help groups or joint liability groups. So
hmm.
you're co-guarantors to each other. We
Okay.
don't, as a lot of lenders require your spouse's NOC. Like I remember once I applied for a home loan just on
Hmm.
my own income, obviously, and I wasn't, and like I didn't have a husband.
Right.
And they asked me for my husband's NOC. I said, I don't have a husband. Then they said, okay, get your father's NOC, no objection certificate to you taking this loan.
What?
I said, what?
How how many years back was this?
This is 4 years ago. This is 4 years
Oh,
ago with two different
wow.
banks.
Wow. So this is the side of things that a lot of us don't get to see in this day and age.
No, and I'm telling you, a lot of women will tell you this sometimes, because we're just so used to this kind of nonsense that we'll just end up giving the NOC, chalo, it's not difficult to get it. But
Yeah.
you see what it is like in terms of the principle of it, it is a terrible thing. And if you kind of keep translating it down to 30, 40,000 rupee loans, which a woman is taking for a business she is running completely on her own, that is just giving
Hmm.
undue power to the spouse. If it was the other way around, which it isn't,
Right.
maybe default rates might go down. Who knows?
Yeah. Yeah, who knows?
Who
Correct.
knows?
Understood. And Neha, when it comes to the investors on your platform, what sort of returns, range of returns do they make?
So we offer 14 to 16% returns. When we launched, we
Okay.
started with slightly higher ones as just introductory offers, but 14 to 16% returns, and that those kinds of returns are possible in only in this segment, which is a
Right.
segment that it generates, like 24, 25% yields, even for banks and much larger lending institutions too.
And Neha, what is the sort of traction that you've seen on the platform till now?
So, Hemant, we've processed about 20,000 loans till date. We've
Hmm.
been in operations for a little over a year, just a few months
Okay.
beyond 1 year. So we are still in the P2P space. Also, we are the youngest active platform as on date, and there are
Right.
roughly again about 18 odd thousand investors on the platform.
When it comes to P2P lending, unlike the traditional lending, Neha, where there is established loan origination system or loan management system in place, which you can purchase and implement, at least as far as I understand, there's no standard platform which is out in the market that you can buy for P2P. So can you help us understand how did you build the tech stack? It is like completely internally built, or what was the approach taken?
So, I mean, it's completely internally built, and it's completely internally built for, yes, one reason that there is no ready-made off-the-shelf SaaS
Right.
product or solution out there that one can adopt. And the second
Hmm.
is that we work in a segment which is, kind of microfinance women borrowers, which has its own set of regulations or guidelines as well. So
Right.
while we are technically not a microfinance lender, but we want to ensure that whatever the microfinance lending guidelines are, we kind of comply with those too. And in
Hmm.
that segment, to kind of there is no existing off-the-shelf LMS or LOS also.
Right.
Definitely not an LMS that captures this kind of dual compliance criteria that we are managing right now. So we've
Hmm.
had no choice but to build our own, and ours is a like we have a certain vision which goes beyond just the P2P play. So we've had to build a fairly elaborate system out
Hmm.
there.
Understood. Understood. And the same applies to the underwriting model, since in the lending business, that's the heart and core of it. So even that is built in house. And did you
That
hire someone specific capability wise to build that out?
so so I have two more co-founders in this venture. Ravinder
Hmm.
comes from an underwriting background, so he worked at a wholesale NBFC and a ratings agency before that. So
Oh,
he's developed our underwriting algo, and he's been underwriting to the microfinance segment before, so some like for many, many, many years. And Mohit is also a 2x entrepreneur who previously
hmm.
built a SaaS platform for wealth advisors in the Australia New Zealand market. So this
Okay.
comes with this exposure of building large platforms, but with a much smaller team this time. So which which is how it is.
Now, looking forward and doing a bit of crystal gazing, how do you see two things: the P2P market itself evolving within the country, and part two, what are the plans of India P2P as a business for the future?
So, Hemant, on the P2P sector, I think what the sector is in itself is quite new, and you can see that after regulations came in immediately, right after regulations, COVID happened. And that
Right.
was a setback for the space, and there aren't too many players out there right now who are, properly active. There are
Hmm.
just about under 25 licenses that have been given out till date, of which I suspect about only about half are active, including, of course, including us. So, but what has the big change that has been like kind of positive thing that has happened in the last year and a half, or maybe even 2 years, is that it's a segment with high investor conviction. It's a very easy to
Hmm.
understand product intuitively, while
Right.
people tend to ignore the regulations or not spend much time on those, which they should. But it's okay. It's what happens. It's an easy to understand product, and it's also a easy to top up product. Like you have a lot of other alternate investments or complex products out there, where
Right.
let's say you invest in the month of July. Now in September you have some additional capital, but and you want to invest more. You will have to diligence a completely new deal, whether it's a bond or a whatever it might be. In P2P lending, you look at prior performance of your portfolio, and like a mutual fund, people tend to just top up their investment,
Hmm.
which kind of makes it a very easy product. And because of like these partnerships with Cred and Bharat Pay, which is the 12% club product,
Right.
promoting this product, there's just a lot of awareness out there. So for any P2P platform, the challenge is not bringing in investor flows. The challenge is
Hmm.
just doing lending on the other side in a proper way, which is
Right.
which is ideally how it should be, because just managing both things can become very difficult.
Amazing. Neha, it was a pleasure having you on the show and getting insights on the P2P market in the country and what India P2P is doing. If our listeners want to know more about the platform, what's the best way they can do that?
And so visit us on IndiaP2P.com. We have all details there, and please feel free to contact any one of our team members, set up a call thereabouts. We are also happy to arrange visits to some of our borrower sourcing sites, just for
Okay.
lenders to understand how borrowers generate returns for them, and
Hmm.
it's quite eye opening. It's inspiring. It'll make you feel that there is, yes, genuine goodness and positivity in the world, which is fun, and you'll also see how returns are actually generated.
Fantastic. So, Neha will include those details in the show notes. And thanks once again for joining us today.
Thank you so much, Hemant. Thank you.
That concludes another exciting episode of India FinTech Diaries. Remember to visit our website, indiafintechdiaries.com, for exclusive content. Until next time, stay safe and keep exploring the world of FinTech.